The market closed a little over 30 minutes ago, and I'm going to share with you exactly what are my thoughts on what actually happened today and where we can potentially see things going from there. And we're going to also talk about some of the few stocks most of you are interested in, especially AMC. So, getting into what happened today, kind of weird day because at the time, Dow Jones started up, was up even 100%. I mean, 100 points on the green. Same thing for the S&P was on the green. Nasdaq was a little bit on the red, but it kind of reversed in trading session and to also close a little bit flat. And the most reason behind this is what came out from the economic data that was expected today. So you can see that on the calendar, we had the initial jobless claims for the 4-week average, so month over month, and we also had the retail sales. These were the two criticals, not the two, but we also have the Philadelphia Fed Manufacturing Index for the month of September. So all of these three indicators were really what drove the market today. But I think there was a little bit of fear about what's going to happen when you actually read what this data means for the state of the economy. Because, first of all, the initial jobless claims, meaning people who are actually looking for job, it's really kind of flat. I mean, the market were forecasting 330,000 and it actually came a little bit over. But it's still really, really close to the pandemic lows, meaning we don't have much people jobless. Okay, that's a good sign for the economy. But on top of that, when you have the Fed Manufacturing Index, meaning how the manufacturing cycle, how companies in the manufacturing space are actually producing more in goods, and it seems like this is really positive. Actually, 30.7 points in versus 18.8. This is a huge gain for the month of September, meaning they are still pumping out goods out there. Well, you actually look at the retail sales month over month. This is actually another good sign because it came 0.7% and the forecast was around minus 0.8. So the market was kind of expecting the retail sales to slow down a little bit, but it did not slow down. And this means people are still buying stuff. But even though the auto sales shifted a little bit, people are still buying stuff, even though it moved from goods to online stuff and furniture. Because if you really think about it, it was in the middle of the pandemic. We had all this online schooling thing. People were buying, iPhones, tablets, furniture to redo houses. People were trying to buy cars, but it was really a shortage of cars because of the whole inventory, which is not enough to actually meet the demand. So especially with the chip shortage, if you want to buy, EVs or one of those, pretty much everything needed in that space now. So it kind of shifted on from that space to the online and furniture because people still want to, when you buy a house with this hot, real estate market, you still want to furnish your house. So it means the economy is not really impacted that much by the whole Delta variant thing, which it's leading to think, well, maybe it will give an insight to the Fed officials to really think, I think we can maybe taper the bond purchasing, meaning we can reduce the amount of money we are pumping into the economy in order to decelerate and kind of fight this inflation coming, because people are waiting. People are waiting for the Fed to do something because so much money being pumped into the economy is not really good because it inflates. So it gives the impression that things are really going well, but in fact, in reality, they are not really going because there is a stimulus. And whenever you remove that stimulus into the equation, into the whole situation, man, people are kind of freaking out a little bit, especially when it comes to technology and growth sector, so coming to the Nasdaq. So I guess that's why we saw the inflection point today after everything was kind of green. But when you really want to see where there is still value, where there is still money to be made in the market so far, if you really have a ton of money, I will say maybe tech and Nasdaq, because so far things are looking good for them. But in the meantime, if you really want to make the most money out of your pockets, if you want to make the most money, the most of your money, there is another place, and I believe right now it's into energy, and materials. So, but we're gonna detail that in separate videos that I'm gonna come be posted later today. But definitely, I think we can expect the Fed to really do something earlier than maybe the rest of people anticipate. But in the meantime, if people are expecting a correction based on that, I don't think it's going to come from anything else than first the growth and technology sector being hit first. But you just never know. There might be something coming up and change the whole thing. But as of now, this is what happened today. And I will see you in the next video, especially when it comes to AMC and others.